Hello, this is Ira Koyner, the original IRA from Triathlon Partners. Today, I'd like to discuss the VIX, which is the volatility index on the market, and what the VIX actually is telling us. Now, the VIX surged in March and in April, peaking at a level of 52 on April 8th, which actually coincided with the year of the S&P's lows. Fell 19% from the year's high back in February. So that moved 19% down, moved the VIX up to 52. That's the important thing to remember. Now, by Friday, yesterday, the S&P 500 had rallied 14% from its low back on April 8th, right? And the VIX has fallen back to the mid-22 level, right? So we've fallen from 52 down to 22. Now, that level of 22 is just above the medium-term range of 13.5 to 21, the volatility that the market's been predicting, that it held all the way from August after President Biden decided to drop out of the presidential race. All through February, we were in that 13.5 to 21 range, and up to 52, and now we're back at 22. Now, is this giving the market a signaling that we're going to return to a sort of sense of normal volatility dynamic? Well, just the sharp rhetoric and rapid tariff policy jolted markets. Recent developments have helped restore investor confidence. Right? And the chief among them is the rare earth minerals deals that was signed with the Ukraine just this past week. Right? This is a huge turning point, both geopolitically and in the U.S. strategic positioning and negotiating power in the tariff negotiations. With this deal in place, Trump will no longer harp on Greenland's mineral reserve, which these resources remain largely speculative and logistically challenging, but simultaneously, U.S. backing of the Ukraine in return for the rare minerals strengthens their push for peace against Russia. Right? Trump rhetoric has changed. It has shifted from him ejecting Ukraine's president out of the Oval Office a couple of months ago to warning Putin that his window for peace is slowly closing and that his actions are unacceptable. What's going on right now in that war corridor. Trump is also contending with political realities. His approval ratings have declined sharply alongside with the market, and he knows those are correlated. Right? And his administration still needs to pass key legislation with only a slim majority in the House and a Senate that recently voted to curb presidential trade authority. Right? So we got a backbone in the Senate to a degree that his tone going forward has to be more measured, more market aware if he wants these other priorities to get passed. His America First strategy is just not about tariffs. It goes beyond that. It's about incentivizing domestic investment, both by domestic companies and foreign companies. And he's had numerous successes on this front of bringing investment dollars to expand and create new sources of revenues and jobs for the U.S. worker. Right? So that's a core part of his approach, and that's a big victory. So I expect his tone on the tariffs to be a more targeted strategy that will be especially targeted at China. Right? Now, the pressure on Russia to end its war also represents a strategic loss for China, which has quietly backed Russia through arms and resources. Peace means that Ukraine's mineral assets become accessible to the U.S., diminishing China's leverage over their supply of rare earth minerals. And in short, markets don't expect Trump to repeat past missteps. And while March and April's sell-off was steep, economic and employment data show no comparable damage to the real economy. So this is Ira Koyner, the original IRA from Triathlon Partners. I hope you enjoyed our thoughts. Please give us a like, a thumbs up, subscribe, and have a blessed day.